Welcome back to Sci-Fi 2020. We started the day with an exploration of how creation has changed. Now we move on to the more nitty-gritties of how we transact. I'll be handing over to Anand, who is moderating this panel. Over to you, Anand.
Perfect. Well, thank you, Trisha, and good afternoon, everyone. It's great to be with you virtually today at Sci-Fi 2020. I'm Anand Raghuraman, Vice President at the Asia Group, and I'm delighted to moderate this exciting panel, Trust in Transactions, Resolving Bottlenecks in the Adoption of Digital Payments. This is an incredibly timely and important discussion taking place as the world grapples with the coronavirus pandemic and relies on new digital tools to sustain economic activity while also saving lives and livelihoods of millions around the world. In the post-COVID era, digital payments have certainly vaulted to prominence and seen tremendous growth, both in India and around the world. However, the very fact that these are relatively nascent technologies operating in a complex political and regulatory environment raises elements of uncertainty. And there are now fresh concerns and fundamental questions about trust in digital payments. Can we trust that our transactions are safe, swift, and accurate? Resolving these challenges while continuing to promote innovation and the adoption of digital payments at scale will be critical to ensuring trust in our transactions and accelerating the broader transition to a cashless world. And that's something that I know all of us here would love to see. So with those opening remarks aside, let me introduce our panel. We're joined today by an incredible group of experts, starting with Arvind Ronta, Vice President and Head of Product for India and South Asia at Visa, Nath Parameswaran, Corporate Affairs Director at PayPal, Shivangi Mittal, Associate at Koan Advisory Group, Beni, Chugh, Research Manager at Dvara Research, and Kilan Harya, Vice President and Head of Payments at Razorpay. Welcome, everyone. Arvind, I'd like to start with you and maybe go around the panel for perspectives on this issue of trust. So put simply, is there a trust deficit within the Indian digital payments landscape? And if so, what are the factors that contribute to this deficit? And the flip side, how do we foster greater user trust in digital payment systems among consumers in India, particularly through privacy frameworks and security standards, as well as product changes? Thanks.
Thank you, Anand. So I agree. I mean, there is one of the biggest challenges towards acceptance and adoption of digital payments is the lack of awareness about benefits of digital payments. And there are the trust deficit manifest through several misconceptions and myths about safety and security that still exist in our ecosystem. And while there has been a broad-based adoption of digital payments, there is no doubt that there is a trust deficit is definitely holding back some of the progress that could be made. And there are really two reasons if you think about it. One is just the education and awareness. While there has been a lot done by the regulator, payment networks, banks, to put out public service messages, right? Like to not share OTP, PIN passwords. But unfortunately, these messages are still not reaching as many people as we would like. There's still a lot of misconceptions that exist. And people are still not comfortable with technology. Right? For example, they don't realize yet that a SIM swap, then that simple act of SIM swap could eventually lead to financial losses. So that degree of awareness could get better. To combat this, I think two things could happen. One is to put security right front and center, and if you look at this from a consumer standpoint, from a merchant standpoint, and from the regulator standpoint, consumers are much more at rest when they know that their data is protected. So as we are harnessing a tremendous amount of data in our payment networks and payment ecosystem, we need to deploy these algorithms, machine learning algorithms, artificial intelligence to combat fraud. At Visa, we prevent $25 billion of fraud annually through multiple attempts that are thwarted by machine learning algorithms. And then the second also is this from a consumer standpoint, can we move away from what you know factor of authentication to who you are authentication? So if you think about risk-based authentication, it's becoming an extremely important way of authenticating based on customers' active and passive biometrics. And I think it'll become harder for fraudsters to penetrate these digital mechanisms if there are some strong defenses on the authentication side laid out. On the merchant side, I think the biggest challenge is just the awareness. Most merchants think, specifically smaller merchants, that going digital could open up for fraud. Again, technologies like tokenization allows them to transact safely and securely with consumer credentials. And finally, on the regulator side, right, I think one of the things would be, and it's already happening, is to inform the regulator with all the latest technologies out there in the world, which are best practices that we could bring to India. So I think there are a few ways in which we can combat fraud and increase our performance as it relates to trust deficit.
Perfect. Thanks, Arvind. Nath, over to you. This question of trust, trust deficits and the broader concept of digital trust. How do you, from your vantage at PayPal, particularly with respect to securing and enabling transactions in the context of cross-border payments, how do you think about these issues? And would welcome your perspectives on this.
So Anand, I was saying that Arvind set the ball rolling. So the way I would frame it is, the times have changed by, we have this Latin word which says that caveat emptor, which is the buyer beware, okay? The game has actually now shifted to caveat vendor, okay? Where the supplier who's actually delivering the service needs to go that extra bit to create that digital trust, between consumers and merchants. So the platforms like us have to step up and take more responsibility, and the broader industry. Okay, we can't expect new segments of users, say, coming from Bharat, okay, who need that extra helping hand to kind of carry out the secure transactions, or small merchants who may not have the wherewithal, right? Coupled with all the myths and the societal and cultural concerns that they've been having over decades. So from our perspective, the way we look at it is, how do we become a trust mark for the buyer and the merchant, when they pay and get paid. And in the cross-border context, which we have been predominantly operating, it is even more paramount, okay, and it is even more dynamic. In the sense that now the Indian buyer or the Indian merchant is sitting in India when he's transacting with a global user, they don't see each other, they can't even trust each other, right? If I pay, will I get the goods? Okay, I've parted with my hard-earned money. The seller, on the other hand, the Indian exporter, thinks that, okay, I have to ship the item, will I ever get paid? Okay, so that's the context. So how do you build digital trust? Okay, I would say over 20 years, by learning, making mistakes, we have reached the stage of establishing a digital trust, of being able to translate, whatever infrastructure, whether it is multi-factor authentication, dynamic risk management, passive, active, tokenization, all that is fine. But you need to dump it down to the buyer and the small businessmen to say that, okay, we have your back. So just an example of what we have done with it is raise the level into very easy policy, saying that if you use PayPal, okay, you get 3 things out of the box. You don't pay anything extra as a consumer. Is that 100% fraud protection? If the merchant doesn't give you the goods, then you can come to us. If the goods are not as described as well, you can come to us, right? So what is the user looking here is just 2 things. He's saying that I need reliable payments, guaranteed payments. More important, if things go wrong, can I come to the platform which I trusted and get some redressal? So this is the way we think, and I would absolutely agree to Arvind. We would say that, caveat vendor, and we need to have a, going in culture of security first and privacy first approach. The data that they provide to us, it is like we are trustees of the data. And in our case, our philosophy is that, the data is used for only 2 things, okay, for provisioning the service, and second is protecting from fraud and financial crime. So that's the framing here in terms of, how we need to kind of look at it, in addition to whatever Arvind said. The onus lies on us as well as the policymakers and regulators to do more.
Wonderful, wonderful. Maybe Shivangi, if you could pick up on this thread. I know you've done a lot of great research on the regulatory bottlenecks and kind of this broader notion of digital trust from a consumer perspective as well. So, based off of your research and building off what you just heard from Arvind and Nath as well, how are you looking at this issue of trust? What do industry, what do consumers need to see in order to have trust in transactions?
Yes, thank you. So
the most pertinent findings from my research that I can share are based on a survey that we recently concluded, which we conducted with urban users of digital payments in India. And this was based largely in Tier X cities amongst English-speaking and tech-savvy users of digital payments. So these would be the early adopters of digital payments in India. And I believe that their experiences can prove instructive when we strive to design more trustworthy experiences for other demographic groups in the country. So because user trust is a function of both user experience and users' expectations, we asked the survey respondents about what are the factors that they consider before they decide whether they're going to transact in cash or whether they're going to transact digitally. And then we asked them what are the problems that they face while transacting digitally. And then we moved on to their experiences with the grievance redressal process. And so first of all the consumers check if they fulfill the basic criteria to transact. So with cash, this only requires them possessing currency in the required denomination. But with digital payments, the list is a bit longer. They need to have the correct devices. They need to be using the same payment systems as the other party that they're transacting with. And they need to have an internet connection. So once those are fulfilled, like Arvind said, people are most concerned about their privacy and their security. And so that those are the first things that the industry needs to assure users of to even get them to trust payments enough to consider using them. And then moving on to the problems, like Mr. Nath just said, so most people face problems related to reliability and reversibility. So in reliability, the most common problems people face are transaction failures and then network related problems like not receiving OTP. And then the other problem is with reversibility, which is that at least 28% of our survey respondents said that they lost money while transacting digitally. And depending on what the transaction amount is, this could potentially deter people from using digital payments ever again. So that is a strong pillar that any regulatory attempts or industry attempts to foster user trust should focus on. And then in the grievance redressal process, almost 50% of our survey respondents said that they had a negative grievance redressal experience. So these included things like not receiving an adequate explanation with their resolution, or that their complaint was deemed resolved when they were not satisfied with the resolution, or that they lost money while transacting and they could not recover it in the grievance redressal process. We also noticed a lot of variation in the quality of the experience that people had with the grievance redressal process, depending on the party that they contacted. So, as an example, we asked, did you find the grievance redressal process to be too cumbersome? And people who contacted e-commerce platforms, say Zomato or Uber, did not, only 2% said that we found the process cumbersome, but people who contacted the police, unsurprisingly, over 60% said that the process was too cumbersome. So there are also these, real practical last mile difficulties that users face, which are the real factors which affect the trust and the consumer psyche overall and their comfort with using digital payments. And all efforts to address user trust must focus on these issues as well.
Wonderful. No, that's very helpful. So, taking this theme of consumer trust on kind of the reversibility and the reliability of transactions, Kilan, over to you, kind of thinking from your vantage point at Razorpay. Yeah, how do you think about these issues, build them into kind of the products that you make, and kind of what's your perspective on this broader notion of digital trust? Is there a trust deficit, and how is Razorpay working to address this?
I think my esteemed panelists have given amazing insights, and I think if I were to take a step back, I think user trust is definitely there, and there are two factors to it, like the panelists mentioned. One is for the existing 100 to 200 million users who already transacting digitally. For them, there is they trust the system a little more, but there the primary gap is around redressal mechanism, as Nath and Shivangi both point out. I think the redressal mechanisms is an area where a lot more innovation can happen, both on the seller/merchant side as well as on the consumer/issuing side. And there are already amazing sort of innovation happening there, and possibly there could be value of standardization as well in some of these redressal mechanisms. The other set of problems that we foresee is the users are not online right now, and that's where we also do a lot of work to help our sellers build trust with the consumers who are coming online for the first time. As COD or cash transactions are generally more costly for the sellers and merchants that we partner with. So we can help the merchants a lot more to understand how they can build more trust, to convert more of their transactions into digital because of the challenges with RTO and the frauds and the inventory blockage that happen with COD. So there is a lot of innovation we focus on, both in building the consumer trust directly with the B2B2C play that we have, as well as enabling merchants, in educating them as well as giving them the right tools to build trust with consumers.
Wonderful. So, Beni, over to you. Just lastly on this question of trust, from your perspective and kind of looking at the broader trends, this question of privacy and also kind of, trust and reliability into the systems. What do you think needs to be done from a kind of a regulatory perspective to enable this notion of trust across the ecosystem and for kind of each of the different players in the transaction chain?
Yeah. I think, like everybody else has already pointed out, there are almost 2 to 3 dimensions of trust, right? One is the whole privacy and will my data be secure, will my money be secure dimension. And there I think we have an ongoing study, which is one of the biggest of its kinds, where we're trying to understand how low-income individuals really think about information privacy. And I think that one, what it is clearly showing is that the incidence of fraud is quite high. And so is the fear of fraud in digital payments. Like almost every respondent knew of someone who had been kind of fallen prey to an impersonation attack and lost their money. While I do understand that a lot of providers say that, this is beyond their control. I mean, it has to end somewhere that, consumers, if they give away their information, then how are the providers kind of responsible? I do take the point on awareness, but I also think that it has to go beyond awareness. We have to push the needle, like Nath already said, on caveat vendor. And the reason is, can we design then in a manner that, people, we do not leave these gaps for people to fall prey to. That's just one kind of overall reflection that, we cannot put the onus on the consumer to go get aware, especially if we are trying to move them from a cash dominated system to a digital dominated system, and realizing that digital is definitely turning out to be in some sense costlier for the last mile consumer, right? So I think like then adding the onus of awareness as well is a little bit too much. In terms of what can providers do, there's definitely, I think in the last 3 years of my kind of watching this space, definitely the needle has moved from users don't care about privacy to information privacy is important to financial information privacy is very important. And what we do need then is, some of this will be facilitated by the omnibus data protection law, but what we do need is a stronger financial sector data protection law that takes into account the needs of the payments space and then applies to all entities regardless of their regulated status vis-a-vis the RBI, right? There can't be any kind of patches there. I think the second dimension of trust, like everyone has already spoken about, is also reliability. That, will my transaction go through? Will my transaction not go through? In cash, you do not have those fears. It's a very immediate, no settlement risk type transaction. And I think what I would like to add to Shivangi's points, all great points. One thing that I'd also add is there's one more layer of reliability, which is really the opacity of digital transactions. So for instance, for a last mile individual, it's very hard to understand if the transaction has failed at the NPCI's end, if it has failed at the merchant's end, or if it has failed at the beneficiary's bank accounts end. And what makes it even worse is the error codes that they receive. Like the error codes give absolutely no information on what has caused the transaction failure and therefore, what the next steps for redress are. And I think that's not a great consumer experience practice anyway, but definitely disproportionately burdensome on the last mile. We saw this in the AEPS transaction failures during the pandemic when unfortunately system failed people when they needed it the most in some sense. And a lot of Pradhan Mantri Garib Kalyan Yojana transactions were not going through. A second kind of layer that I would add to trust is also continuity of digital payments, right? I mean, what we've seen in India is that a lot of acceptance infrastructure and merchants' willingness to accept digital payments is driven by the cash incentives that they get. And when the cash incentives are then taken back, their propensity to accept that digital payment also declines. So as a consumer, I'm always uncertain if that particular merchant will accept this digital channel or this mode of digital payment if I were to go to them today. And I think those business discontinuities definitely affect consumers' trust, when they kind of think of digital payments. The one last thing is reversibility is definitely a huge pain point, especially in, let's say, APS type transactions. And I think this is also a little bit, I think it's kind of a lack of imagination from the providers as well. The reason that I say that is that we've taken a digital approach in onboarding, in making the system seamless, all of that. But the moment it came to redressal, we fell back into the physical touch point redress. Like it's we are yet to see a redress which is as seamlessly digital as making a payment is. Right. So for instance, in AEPS, you have to go back to a bank, fill a physical form for a chargeback if your digital transaction has failed. And nobody has really thought of, can business correspondents actually, initiate that on their POS devices then and there. So I think there are these dimensions of trust, which definitely one of which is data protection. The second is information security. We all remember the Hitachi fiasco pretty well, and how when even providers kind of, when they have a lapse in information security, that can definitely affect consumer trust, but also the opacity of digital transactions, inability to understand the point of failure and the course of redress, and just the onerous process of redress. So I think these are the big issues that are, and definitely business discontinuities. And together, I think these are kind of making digital payments less reliable for consumers.
Thanks. Sorry about that. Am I coming through? Perfect.
Yeah.
I just wanted to build off of your point on, this notion of business discontinuity and kind of shift gears towards, more broadly, how do we promote use of digital payments? There's a number of kind of related questions around kind of the acceptance side of the equation, making sure that digital payments can be accepted among different merchants, and then also kind of used at every level of society, not just amongst the urban elite. And so maybe I'll start with Kilan and then go over to Arvind on this question of the incentives that need to be provided for the banks and the other financial institutions in order to promote kind of the use of digital payments in India. What incentives do these financial players need to help kind of reduce some of the bottlenecks that we're seeing in terms of the kind of the spread of digital payments in India?
Yeah, I think the early thoughts I have is, India actually is one of the most advanced regulators out there, which is trying to innovate both on how do we drive better digital adoption as well as, have a more secure ecosystem. So I think it's possibly found a decent balance between the two so far. And the pace at which we are innovating is exceptionally fast. I think a few things we have to work on in terms of, ensuring that all the other players who are contributing to this innovation continue to contributing at the same level of energy and excitement that's happening today. I think it's ensuring that there is enough monetization play available for everyone. Today we are seeing that India as a country peaks at the TPS or transaction per second of close to 2,000, and many systems fail because not many parties in the systems that are there, right from acquirers to issuers to intermediaries. Multiple schemes and everyone are not making enough money to invest in this infrastructure. And if you look at US, which is, let's say, possibly somewhere around 100,000 transactions per second, and China, which peaks at close to 400,000, India is going to get there in the next 5 years, 7 years, 10 years for digitization to really go deep. And unless you have enough monetization mechanism for all the folks in this value chain, we will not really make this investment. If we don't make this investment, I don't think we can get to 15% digitization.
Mm-hmm. Perfect. Arvind, kind of from your perspective at Visa, what do you think are the incentives that are needed for banks or other financial players to really promote the use of digital electronic payments in India? And more broadly, just this notion of spurring innovation in the sector. How can policy and regulatory tools be used as an enabler, not a constraint?
Absolutely. So I think first, in the context of India, let me share what has already been done. And of course, there is room to do more. But just recognizing, I think there's a huge impetus from both government and the regulator on this front of incentives for digital payments. So starting with setting up an acceptance development fund to ensure acceptance scales quickly. I think that's the right move, and Visa contributes to the ADF. This is a brilliant idea by the RBI and the industry participants. Second is a sandbox for fintechs to try out innovative ideas. Right, this is something that the regulator has pushed. A lot of the participants in the ecosystem are actively leveraging that, and I think that's also very positive. Third is incentivizing merchants through tax breaks, and taxing large cash withdrawals. So that's been really important because you want to give incentives and the right disincentive to promote the use of digital payments. And then finally, there's a bunch of these actually disbursing government payouts digitally. You are driving more reasons for people to access digital means because you've got to access digital endpoints for accessing those disbursements. But yeah, I mean, there's always room to do more. And I think three areas I would call out. One, to the last point, I think, yes, you need to have economics to be worked out for everybody in the value chain to spur innovation. So in certain scenarios, of course, there could be low economics, such as micro and smaller merchants and so on. But however, a market-decided economics would definitely encourage ecosystem players to invest, and that's super important. Number two is just lower the cost of compliance when it comes to managing digital payments in terms of jurisdiction of storage and a lot of the other burden of compliance that might be slowing down innovation or adding to the cost of compliance that needs to be looked at. Number three is tax breaks and incentives on funds that have um, that are demonstrably set aside for research or emerging products and practices. Those are, I think, all the right reasons for investments to drive digital payments.
Perfect. Thanks, Arvind. Similar question to you. What are in your view, the regulatory models that India should adopt as it's looking to promote innovation, competition, and trust in the digital payment system? And again, thinking from the perspective of cross borders, not just kind of having India kind of a domestic ecosystem, but also having it connected to the broader financial flows in the global economy as well.
So, Anand, I'll take just a minute to touch on the incentive piece. Okay, all of us know that the right incentives would drive the right outcome, right? So, I would say that targeted incentives by the government, okay, has to go to smaller merchants, who need to get that extra, push to come into the digital world. Similarly for consumers, right? Especially, for example, India is expanding its Digital India programs to agri-tech, edu-tech, health tech, Those are all sectors. There are a lot of service providers and ecosystems which need that extra push. So we are all for incentives, but in a targeted manner, like direct benefit transfer, which the government has kind of fine-tuned and done it very effectively, and for a limited period of time only. See, after a period, the merchant needs to kind of have a viable business model. So the entire service provider chain, right, which Arvind and Philan rightly pointed out. So incentives are not bad, but it becomes bad once it is kind of very broad-based and it is not targeted and it keeps on going. So you get a false sense of uh, this thing that it's like a drug. As long as that is on, people use it. Once you take it away, then nobody uses it, which is what Beni was also trying to address. While these are good for a certain push in the initial stage, it needs to kind of have a virtuous cycle of its own. That's one. On the innovation bit, I would say there are two good things which RBI has done. Okay, number one is a regulatory sandbox, which has come into effect. The new cohorts got delayed because of COVID, but we are told that it's starting post September, October, November once the COVID gets in, which is a very welcome step, right? It allows everybody to go in and operate in the sandbox and come out with innovations and in areas, which is to remove friction and come out with innovative products which could drive digital financial inclusion. Number two is, RBI again very recently allowed a pilot to go into places where there is no internet connection or very weak internet infrastructure. Again, what Shivani said, one of the prerequisite was internet being a prerequisite to participate in digital payments. So that experiment has been allowed. There is a pilot which is supposed to run till March. So again, a very welcome approach. Okay. What we could do is, from our international experience, as things evolve, on the innovation side, we could consider something like a no action letter approach, which supplements the sandbox. A no action letter, in a very simple way, is that if there is a service provider, he goes to the regulator, says this is a product, these are the controls, the regulator approves it, and you can launch the product. Okay, as long as they stick within the timelines. So it's a nice complement which could consider at a later stage. Coming to competition, I think there is a lot of, the segment is vibrant. We have got a whole host of players, 80 to 90 aggregators, wallet providers, card schemes, UPI players. So you could just go to one merchant site like IRCTC and you could look at the number of options. There is a complaint in the user groups which says that there are too many options. Okay, so there is a lot of competition. Okay, it just needs to be channeled, into a kind of into these innovative approaches using a sandbox or whatever we discussed. I would say there is another element of innovation which people in the industry we are all supporting is India has innovated on UPI, right? By far the best real-time payment system on the planet today. Okay, it is time for that to go international, and there is a lot of effort by NPCI. So that's a great opportunity to take it. India has done a lot of work, which again we don't acknowledge, is around eKYC and video KYC. Again, we can take it into other markets. And the third element is a number of our fintechs who we all partner. We have a fintech incubator, for example, people we support it. We are looking at how do we take them international in areas that complement our business. So a whole host of models are available, both in terms of innovation, in terms of what we can do in terms of incentives to drive digital adoption, and things look pretty promising. I would say that the glass is half full. In fact, it is 3/4 full on this side.
Perfect. Beni, one last question for you. This notion of points of friction. I think we've gotten a little bit of that from Nath, from Killen, from Arvind, Shivangi as well. But what are the primary points of friction between the regulators, the fintech players, the consumers, and what is, if there was a silver bullet that you think, one thing that could help kind of knit this all together, what would that be? Not to put you on the spot, but if you could wrap up in 90 seconds or less, we can turn into our audience questions as well very quickly.
I can assure you I don't have a silver bullet. If I did, I'd probably be encashing it, but sure. I think in terms of consumer experience, the friction points that exist for the consumer are definitely the lack of cash in, cash out points. So while we are trying to think that digital is, I mean, people, we are still in a transition, right? The migration to digital is not complete, and depending on the tier that we are looking at, the distance from a completely digitized kind of financial ecosystem just keeps increasing. So we have to make that transition smoother for people. There are use cases for which digital use cases do not exist, and people have to fall back on expending cash. We do see that so much of India is informal, and payments don't necessarily go into bank accounts, are made in cash, and therefore that kind of a cash in, cash out infrastructure, because what we feel it's doing right now is because of that lack of fungibility between digital and cash, it's actually dissuading people from experiencing digital altogether. So I think that's one big friction point to my mind that exists. Second, that we've spoken about quite extensively is definitely the quality and the format of redress that is available. I do know big providers are now looking at how they can actually kind of automate payment side redress, because these are small ticket transactions, mostly similar formats of failure, and if they can apply artificial intelligence there to kind of provide, almost instantaneous redress. And we'd personally love to see more of that in a consumer-friendly way. When it comes to from the level of regulator and the entities out in the ecosystem, I think points of friction are then about regulatory status status. This is not to say that everyone should be regulated, but everyone should be aware of where they are on the spectrum. And sometimes, lack of clarity on those grounds can then have retrospective effects, which is kind of something that we feel is a matter of friction. So if you are a technology service provider's responsibilities, codes of conduct, information security practices, everything to the extent can be laid out. It's great to have it laid out for business certainty and definitely for continuity of consumer experience. And in terms of just the number of entities participating in the system, I think though Nath does make a point that there is competition, and we do have, like, for instance, a number of players on UPI. I think we do need to inspect the nature of that competition, because many of those entities are yet to break even or are yet to present numbers that kind of promise an economic viability. And I think instead of shying away from those questions, we need to dig deeper as to what is a possible business model that can be allowed for, and how can we actually make that business profitable, because definitely cash burn models won't be profitable in the long run. And that's where the fear begins, that when the consumer has completely migrated to digital, and then when business viability becomes a question, then we are asking consumer to find alternatives at that point when they've gotten used to it. So I think those are the points of friction that need more examination, to my mind.
Wonderful. Well, thank you, Beni. I think we've gotten incredible insights from this panel, and I'm sure everyone who's watching is just kind of blown away by the level of depth and insight that, we're hearing here. I'd like to turn quickly to a couple of audience questions that we have picked up. The first, is this question around trust in the stability of the broader financial system. We, in India and in many places are moving from kind of a mostly stable set of financial institutions to a world where fintech companies, these startups, are acting and are active in this space, and in some cases acting somewhat as social media platforms. So maybe I'll turn this first to Shivangi. If you have any thoughts on kind of how you see this broader transition playing out, and particularly on this question of stability in the overall system.
I agree that stability, and I think Beni touched upon this earlier, just in terms of the variety of instruments, the brands that are coming into the market every day also create a challenge for consumers about not just brand recognition, but otherwise understanding payments, how different systems work. And they also throw up a challenge for the regulators, especially if the regulator is looking to standardize or to solve problems for which users face across services. So one example is the turnaround time regulations, which is the duration in which service providers are expected to solve grievances or transaction reversals. And there the regulator has had to specify a different time duration for different instruments and for every nature of complaint. So this is for sure a dynamic landscape. It's necessary to innovate, but it also creates new challenges that almost every stakeholder has to keep pace with.
Wonderful. We got another question on some of the latest sort of domestic focus on marketplaces. Paytm has certainly been active here. And so I think I'll turn this question to Kilan in terms of, how you as a kind of a domestic Indian kind of payments company are thinking about these dynamics and how they, relate to this broader notion of trust. How can, what is the domestic kind of industry perspective on this, and how should consumers view kind of this broader notion of the products that you're offering, kind of the marketplace, and how does this all tie back to this core notion of trust and the broader adoption of digital payments?
Yeah, no, I think marketplaces are doing their bit, right, and they have their own sets of checks and balances. And the incident that was a very small incident, tactical one, which got resolved, right? So I wouldn't read too much into what has happened, and that really does not dent consumer trust. In fact, if you look at, both of these brands have, massive consumer trust out there, and they both created through different mechanisms. And these checks and balances are important. And then when, small incidents happen and, things get resolved on its own, I don't really think that the incident really needs, too much to be played on.
Perfect. I think, just we can shift real quick to this question of data. I think India is certainly in this really interesting position in terms of putting out several new data regulations, whether it's the data protection bill, kind of non-personal data. So how did these intersect with the financial sector and fintech in general? Maybe I'll turn that over to Nath for your perspective on this, and Arvind, feel free to chime in right afterwards on, what is the ideal kind of regulations for data in the fintech sector from your perspective?
Very, very topical and front and center, right? Which business is not data driven? To my mind, even an FMCG today is data driven when they decide to make a product. Okay, but when we talk about, like I said upfront, right? If I want to recap, people in the payments industry or financial services industry have been regulated, and we operate in a regulated space, either in India or globally, for a fairly long time. Okay, our approach to data is, like I said, at least we look at data as, we are the fiduciaries. So we are very happy to see this term being used in, our data protection bill. Okay, so the data is given to us by the user. So for provisioning of the service to be kept in trust for the intended use, which is provisioning and protecting them from fraud. Okay, we are not in the business of data, right? We don't use this data to do something else and, monetize this. So, firstly, there has to be a recognition that not all business models and not all entities operate the same way, especially when it comes to financial services world. The influx of, tech companies into this field, okay, at the cross section, has added this dimension of what is social media, what is, ad tech, what is fintech, all that. So the first thing is to understand that. Number two, the other notion to really send across, it's a job of the industry to demystify for policymakers and regulators. They get it, but it's always useful to remind us that with cloud computing, IoT, machine learning, okay, SaaS-based approach to almost everything, okay, the location of data, okay, doesn't actually say that, it is going to lead to better privacy and better security. Okay, just because it can be stored in one location. Okay, because everything is on the cloud. Okay, it is all about access and the rights of the user. What are the controls you impose on the data, and what do you do with that? Okay, these are the elements. Therefore, what I am trying to come out at is any laws and regulations. India doing the draft protection regulations is great. The democracy is putting out the largest democracy is putting out a very positive narrative on this front, leading with that. So it's very important to have the right balance, right? That there are businesses which use data for a certain purposes. Okay, location of the data should not matter for privacy and security. The right enforcement which has to be the focus. Okay, you in the bargain, you can't throw the baby with the bathwater and say that it has to be a very hard form of localization which will create problems for anti-money laundering, fraud detection, and also pose unintended consequences for the Indian startups as they try to go global, right? So how do you tackle that? Therefore comes the question which is implicit of cross-border data flows. Okay, how do you address that? The data can sit in a different location but is answerable to Indian laws. Okay, you can do the the permissions act on that given by the user. So this is the kind of thinking that we need to have as we kind of look at legislating these policies.
Perfect. Well, I know we're coming up on time, so I think we'll have to park it there. But I just want to thank all of you for this great discussion. Thank you to our listeners who are tuning in, in India and around the world. Thanks to ORF for this, hosting this great discussion. And I know I could certainly listen to all of you talk for another hour if we had the time. But really looking forward to continuing these conversations in person next year. Thank you. Stay safe, stay healthy, and everyone be well. Over to you, Trisha.
Thank you, Anand. And
Thanks, Anand. Thanks, everyone.